stages, time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like the razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with a hawk's eye. Options in place in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like the razor blade. This is where the big plays are made. Oh, step by step they break it down. No confusion, no spinning around. With every trade they set the tone. Making big calls from their trading throne. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategies sharp like the razor blade. This is where the big plays are made. Oh, this is where the big plays are made.
Well, good morning, everyone. Happy Friday.
Good morning. Happy Friday. How you doing?
Oh, doing pretty stinking awesome. My goodness. Did anyone, Alex, we had Alex on closing playbook yesterday. We did the Shotgun Thursday, and I know we're going to have Roger on today. He'll have no clue what the heck we're talking about. Roger, if you want to come on here, you totally can. Every single Thursday, Roger, we have some fun. Since there's Friday expiration on stocks, we will pick. I use a debit spread to help offset that time decay because there's just rapid time decay there in the last day. But basically, we're trying to pick stocks that drift either higher or lower overnight. Kind of a coin flip trade. We have a lot of fun. It's our most speculative trade of the week in here. Just shooting from the hip. We call it Shotgun Thursdays. Yesterday, Alex Reed came in here and he's got this little handy dandy scanner. He gave us Wolf. Up 600% today. We even for full transparency, that's our second biggest winner here in opening playbook. First,
nice.
LSK, but yeah, that is awesome.
Congrats.
So if anyone took Wolf, let us know in the chat. That was totally awesome. If you guys aren't in Alex's Telegram, David, can you just post that link here one more time? It's free. He's giving these trades out for free. I don't know why he's doing it. Nice guy. Obviously, not every trade's going to win. You guys know this. But holy moly, when they do, it's pretty awesome. Now, as far as the majority of trades went for the old Shotgun Thursday, I'll pull up my screen because I got to do some bragging here because I took it on the chin last week and I told you guys I don't shy away when I take a loser. I don't shy away. So last week I think I had the worst performance of Shotgun Thursday in the history of Shotgun Thursday. This week we're back. It was a nice little bounce back week here for Shotgun Thursday. Here's my screenshot I just grabbed before hopping on today. So we had all of them off for a moment. Meta sold off just a tad, but I can't complain about those shotgun trades right now. CLSK also up nicely. Wolf, CLSK, BITF, Iron, all of the Cypher, all of those speculative former Bitcoin mining names turned data center names are just going crazy right now. It's quite unbelievable, to be honest, but it still could keep going with all the speculation around AI, the energy needed, the data centers needed. We'll see what happens.
I don't think we've ever gone 100%, right, on shotgun, because that's never even the goal. Like, we're never even expecting that.
Correct. Like 100% win rate. Yeah.
Yeah.
Never. I don't think we've ever done 100% win rate.
Yeah, we're pretty darn close.
We are. Meta and Costco aren't working out at the moment. Costco flipped back down, but we'll see. At the open, they were all positive. So we'll see what happens here. But hey, I can't complain. Even if Meta and Costco lose, we're obviously outweighing that big time to the upside.
Yeah.
All righty. Well, I am going to, before Roger comes in here, and Roger's going to walk us through just a very, very basic way to view the markets, basic in a good way. Like anyone can do it. You guys should all start doing it. It'll tie in a lot with what I talk about in regards to seasonality and using data as your friend when picking stocks. Before we do that, though, I am going to give you guys a pick here. And actually, Roger, I'm going to ask you. We've been doing as of lately. What I'm trying to do is just stack in a monthly option each Friday. So that each week we're just taking one option about a month out. I do a debit spread. The theory is that, hey, we're just going to pick a stock that we think could drift higher over the next month. If we're right, using the options we're using, we're getting 100 to 150% return on investment. So each month each Friday, we've been looking to do that. And so we got a new Friday here. Curious if you've got any stocks up your sleeve that you like over the next month. And I know I'm putting you on the spot, but you're the
That's
man
okay.
with the plan always.
I always have stocks up my sleeve.
Yep.
It's fine. I really like, right now, I'm really liking Oracle a lot. I think Oracle has some more.
I like Oracle too.
I gave it as a swing trade in the pit last week. We took profit on it, but I told folks I think there's plenty of more meat on the bones.
That's funny.
And,
That's actually one of our current monthly picks, but we can stack another one in here for
yeah,
Oracle.
I really
like Oracle a lot.
And let me see. Where's my notebook? I also like, hold on. There's a couple of other ones I like. I also like APH quite a bit. It's not like super, super hot at this moment, but it's a stock that I'm also looking at. APH, very.
This
yeah,
thing is a mammoth.
Yeah. It's
Wow.
it moves. Yeah, it's a nice momentum stock. So I think if this stock continues moving, I think we can get some more upside on there.
Awesome. Well, we'll take a look at APH maybe next week, guys, because they have monthly options, so that would make sense for next Friday. But this week, let's just do one on Oracle here. So again, what I'm going to do here, guys, I'm just every single Friday going to look to add a position about a month out, knowing some of these are going to lose, but we want to have more winners than losers, and our winners are going to outpace as far as the ROI. So I showed you guys that calculation of the day. Let me see if I can go find that document that I did it in. I probably won't be able to. But essentially, when we're going for trades using these debit spreads that are shooting for 150 to 200%, we don't need to win 80% of the time. We don't need to win 70% of the time. In fact, if you're winning 50% of the time, you're killing it with these trades. So just keep that in mind when you're taking this. And ideally, what we're going for here is that smooth growth curve over time, where over the last year, I've been averaging 12% a month on this. Again, that's not going to change your world. It's not going to make you retire overnight, but it is a nice way to maybe have some trades running for you in the background that are generating income, knowing, again, that one may lose and two may win, and you're going to be net ahead if that happens. So that's the theory here. We got Oracle lined up here. I think that's a beautiful pick there, Roger. It's a great stock. Obviously, had that gap up, a little fade, then a little, half fill on that gap where it's down as we talk about it, but it looks like it's going to go higher from here. So I'm going to go out a month from now on Oracle. Let me check out these strike prices, guys, and I will give you the trade once we get it all settled in here in a moment. It just depends what the pricing is at. And if we can get filled at this, my goodness. I'm going to see if I doubt I can, but even if I can get it this at 250, this is a steal of a deal. All right, you can get it at 245. I just did that to test it out for you guys. I'm going to give you guys Oracle here as a monthly pick. So we're going to go to the 14th of November. That's 4 weeks out now. 14th of November expiration. That might even be 1, 2, 3, 4. That's 5 weeks out. So let me go to the 7th of November. I just want to overlap our stacks here. Either one would probably work.
Stacks on stacks.
The 14th of November filled right away, and it's a better price. So we'll go with this one then. All right, 14th of November expiration. We're going to buy the 300 strike call, and we're going to simultaneously sell the 305 strike call. This is at a net debit. I just got filled at 245. So what that means, guys, and I'll walk you through it here in just a moment. If Oracle finishes above that higher strike here over the next month, you make 104% return on investment. So again, this is meant to work passively in the background. You set the trade, you honestly forget you even have it. Stocks like to go higher. Good stocks like Oracle like to go higher. So what we're betting on here, and you can shift it further out if you want to, but this is a very, very passive, easy trade to make. Let's kill this one there. What we're
You want me
betting.
to post it in the chat?
Oh, yes, please post that in the chat. Thank you. What we're betting on is we're giving Oracle all of this time, 14th of November. And for those of you who have been here before, you know what I'm about to say next. But for those of you new, guess how high we need Oracle to go for us to make a little over double our money? If we can get any guesses in the chat, I'll take them. With that spread I gave you there, again, enter it on all one ticket, use a limit order. But with that spread I gave you there, we need Oracle to gain $3 over the next month for us to double our money. That is less than 1% on this stock. If the stock gains more than 1%, you're in the gravy zone, rocking it out. Do you see my crosshairs on this screen? If you can see my crosshairs, we're seeing price by time. We need it above that line by that expiration to double our money. For those of you new, I'm hoping that you see this and you're going, what the heck? How is that even possible? With options, you normally need stocks to go all the way up here to double your money. No, with the way we're using debit spreads here, with the way we're rigging it up with what I call the wrap order, we were giving it 5 weeks to barely drift even 1% higher. It's less than $3 now to go higher. So that's what these trades are all about. Sometimes we'll go a little bit more aggressive. It just depends what the options are paying. Right now, the wrap order was great risk to reward. So we're just going to throw that on for our monthly trade. Now I'm going to go ahead and get 4 of those contracts. That's going to put me around $1,000 in that position. That's my goal, to put on about $1,000 trade each and every Friday, knowing that on average, we're looking at 10 to 20% a month between the winners and losers. So that's just a nice little extra income coming through the back door there when it all works out. Now, again, there's going to be times where all 4 win, and there's going to be times where 3 of the 4 lose. So keep that in mind. Key is being consistent in writing the correct options with really good stocks.
I'm going to mess up this username, but Posada Gamma, you do not need to own the underlying stock for this because it's a spread. The type of spread that it is, the 2 options cancel each other out. You don't need to own the stock.
Correct. This is not a covered call. This is a debit spread. So we're buying the call and simultaneously selling a call at the same time. What that essentially does is offsets almost all of that time decay premium, that extrinsic value. And in my opinion, it gives you much better risk reward. And also, mathematically speaking, it's going to give you a much higher win rate than just buying calls a month out.
And for Roger and anybody else who's new, when you hear that little jingle bell, it's me posting stuff in the announcements that are down below that the users can see in their platform. But it's the same thing I'm posting in the chat. It's just a jingle to let them know.
Love it. All right, now we got I'm going to ask you, Roger, take it from here and walk us through. I'm just curious from the chat, guys. I know a lot of you have probably worked with Roger before. If you haven't worked with Roger, give me a new. Just type new in the chat. NEW.
I think this is the most I've heard Graham speak, and the least I've heard me speak in 10 years. I love this.
It's a little case of student becoming a teacher here, because you guys may not know this, but I actually got started working under Roger. That was the first job I took out of high school, was working under Roger, learning from him, soaking up what he had to teach like a sponge. And boy, is it good stuff. You guys are in for a real treat here today. He is the best in the business. He knows what he's doing. He's been doing this for a long, long time. And most importantly, in my opinion, it's one thing when there's a good trader and they know how to make money themselves. That's great. It's another thing when that trader knows how to teach other people. And then you start hearing, probably hundreds, if not thousands of stories of people doing what you teach them, Roger, and making really, quite frankly, insane amounts of money following along. I know you had Richard, Omar, and tons of people in your Telegram.
Bugs is here.
Bugs, yeah.
Some of them right here, actually.
I love it. So, guys, you definitely want to pay attention to this. Again, this is how I got started. First job out of college was learning under Roger. I had a couple different job offers, and after meeting with Roger, former hedge fund manager, traded everything you can imagine. I knew that's where I wanted to go, and that's what I wanted to do, and I wanted to learn under him. So, Roger, all yours, my friend.
Thank you for that warm introduction. I told this guy about 6 years ago or 7 years ago that he should be, he'd make a great guru, but he didn't
Yeah.
listen to me. He didn't listen to me. He didn't think, but you know what? I was right again.
It took some time, but here I am.
Mm-hmm. All right. Thank you for that introduction. I know you got a busy day, Graham. Do I could just share stuff on the screen, David, and it'll all
Yep,
magically
I'll bring
appear?
it up. Yep.
Okay, cool. Again, sorry, folks. This is my second time using this platform. I'm going to try to be, so just let me know. You should be able to see
Yep.
my screen. Okay. Okay, cool.
Absolutely.
Perfect. That's all I need. I could work from there. And
Perfect.
folks, I'm going to talk a little bit about trade structure today and how to structure trades. Now, I know some of you, a lot of you already know who I am. This will be a great refresher course for you. And if you don't know who I am, my name is Roger Scott. I've been doing this for over 31 years. I'll give you a very, very quick introduction because I have a lot to cover today. I have a pretty interesting background. I used to manage money with several interesting people. One of them is Kevin Hassett. He's currently the senior financial economist for President Trump's administration, and he's waiting in line to take over Powell's job. So that's one of the people that I managed money with. Another one of my partners was Charles Calamirez. He's currently the senior professor of economics in Columbia University. He's been there for over 30 years, well over 30 years now, because I've known him for over 25. And he's been there all that time. I've also worked with Curtis Faith, and I've managed money for the Bronfman family. The Bronfman family I did this between 2000 and 2008. The Bronfman family was the richest family in Canada and the 10th richest family in the world. If you don't know who I'm talking about, I'm sure you all have been to Universal Studios. You all have had Seagrams, the brand Seagrams. That's that Time Warner. Those little mom and pop companies. Yeah,
those little tiny ones that you only know in like Nantucket and little towns like that.
Right. Yeah. Those. But anyway, these are, and I was their private trader for about 7.5 years. So I accomplished quite a bit. Now I like to give back. I've been giving back for many, many years, and it's been working really, really well. People have been becoming very, very successful with a lot of my education. I've trained a lot of the gurus here at the pub, and I really love teaching people. It's one of my biggest. I love doing it. I do it all day long. Trading, if I could teach and trade all day long, my world is complete. Okay.
Well, for those who don't know, we currently have in our ecosystem here in our network, we have 13 professional traders, 13 gurus, as it were. Roger is the OG guru in our group here.
And right. Sorry, I'm jumping back in here. It's kind of like, I don't know. I like making football analogies. I know not everyone gets them. But a lot of times in football, you'll get a coach like Shanahan, who a lot of other now superstar head coaches came from the Shanahan tree, the Shanahan family, where they trained up under him and now are running team like McVay and a lot of the other coaches, McDaniels, all of the other top NFL coaches. It's a lot very similar here with Roger. Everything kind of started with Roger, and a lot of us learned under him, trained under him, and we're all part of that Roger Scott tree right now. So this is like top dog here, head honcho you guys are meeting with.
Well, I appreciate it. Thank you again, guys. So I want to talk a little bit about market structure, and what I want to try to cover here is I want to use the 80-20 principle. In my case, I call it the 95-5 principle, and because I've noticed that most folks focus on things that are just not that important. They're just not that valuable. And you're skipping the things that are really, really important. The way I like to call it is 60, 30, and 10. 60% of your trading is right here between your head. It's a mind game, okay? And any high-level athlete will tell you exactly the same thing, okay? I mean, it's a mind game. You have to have a certain level of skill, and you have to have a certain way of thinking. 30% of it, 30, which is still quite a bit, is the edge. That's what I like to teach you, the edge, to show you the market structure so you can be consistent. And 3, there's 10% left. That's the stuff that majority of traders think is very, very important. It's really not. You could do really well without most of it. Not all of it, but most of it. So what I try to do is I try to get people to focus away from all that stuff and just focus on the most important things that are the most important things that will really change your, take you to a whole new level, basically. So the first thing I want to talk about is markets, believe it or not, but markets have a a structure. And if you can understand this dynamic, it's a really, really clean dynamic. I'm actually going to share a different screen so I could not share a different screen, share a different thing on my screen. So right here, let me just go away from all of this. So right here, let me just erase this. There we go. Perfect, perfect. What you see right here, this is a 15-day exponential moving average. This is the 8-day exponential moving average. And these are standard deviation deviation bands, okay? All right. Very, very very important, very important bands right here, okay? And these bands, what these bands do, and I'll take. I'm not looking at the questions right now. I'll look at the questions after we're done with this. I'll answer each and every one of your questions. I promise you. So let me just finish this. So you could see right here. You could see right here the 8-day. Now you're probably thinking to yourself, why does he use the 8-day and the 15-day levels? Why? What's the big importance there? Okay. So what happens here is this 8-day EMA equals 5-day SMA. You guys all use the simple moving average. Like this is right here, the 200, this is the 100, this is the 50. Well, the reason I'm using exponential is because they're just a little bit faster and I want a little faster response. But in all honesty, this would equal the 5-day simple moving average, and this would equal the 10-day simple moving average. But instead, I like to use the 8-day EMA and the 15-day EMA because they're a little faster. But you could just think of this as the 1-week low and this as the 2-week low. So as a general rule, you want to buy stocks that are trading above the 1-week, not low, but the 1-week average. So you always want to buy stocks that are above this line right here. And you don't want to hold stocks that are, and you don't want to hold stocks, that are below this line right here. This is the 15-day EMA. You don't want to hold stocks. So as a general rule, and I'm going to tell you, I know you're going to be like thinking, Roger, this is really, really simple stuff. I know it's really simple, but if you could follow these 2 rules, you're going to eliminate like 95% of your problems. Buy stocks that are trading above this level and liquidate stocks once they start trading below this level. And it works the same way on an inverse. So for example, NTAP, okay? See how NTAP, the yellow line is right here, and the blue line is right here. Same thing to the downside. So we're trading the SPY. I'm just going to use the examples to the upside because they're easier to show you. But you could see here above the 8-day, very positive. Below the 15-day, not really good. Now, what are these dots right here? They look very tricky. They may look like Bollinger Bands to you, but they're not. They're not Bollinger Bands. I'll explain to you exactly what these are. What I do is I measure the 10-day range of the stock, 10-day range. Basically, what's the ATR of the stock? And that's right here. So you could see in the last 10 days, the average movement of the SPY is $4.33. Okay, it's right here. This is the 10-day ATR. I always have it. What I do is I take the 150% of this number, I multiply this by 150%, and I add it to the 8-day EMA, and then I subtract, that's this, and then I subtract it. So all these lines are just a rolling ATR times 150%, add it and subtract it to the 8-day. Now, why do you think I have this on every one of my charts? Why would you think I have this on every one of my charts? And by the way, the strategy I'm describing to you is exactly what I use in the pit, and the pit gives me a 94% win rate on over 400 trades. So this is, a lot of folks are now putting this on their chart. This is really, really helpful. And what this will do is it'll give you the rhythm of the market. For example, let me just look at Microsoft, okay? Oh, Microsoft is trading below the 8-day EMA, which means it's not good right now. It may be good when it gets back up. Similarly, GE is trading almost at the 15-day, a pivot here. We want it to trade right here. The day's still young. I mean, we're opening right now. The point I'm making for you is that this can tell you let's see, what's a stock that's a good example of an overextended stock. Okay, see, like this stock here, once it starts trading over here, it gets overextended. Okay, so this can be a really good gauge for you, a real simplistic way for you to keep track of stocks that are overextended, underextended, or just in the range. And a lot of you are just getting started. And I'm going to tell you, having these guardrails could be very, 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 very helpful to you. Because if you could follow these rules and just a couple of others that I'll explain to you, you could be completely changing your trading trajectory. Like I said, I have folks who started making $700. Now they're making $30,000-$40,000 a day. Some people making $100,000 a day. Some people making more than that. Okay, so there's a lot of Pitt is the Roger Scott Pitt. That's what the Pitt is. So you could see right here. These are some examples. You could see. Look at GE. Okay, it's a great example. What happens to GE when it starts coming above this area? It backs away. What happens to GE every time it comes down to this area? It starts coming back up. So just a simple thing like this, can completely change your trajectory on trading and make you see whether the stock is balanced, overextended, above its price value, within its value. And we're using tools that that are completely free. You don't have to buy them anywhere. You don't have to. They're available in anywhere you could look. Every brokerage platform has them. Bar charts has them. I use a lot of bar charts. This works very well with QQQ. This works really well with SPY. This works with every stock. And what I'm explaining to you is really, really simple, and it's very, very effective, extremely effective. And it's been effective for the last 100 years, and odds are it will stay effective for the last 100 years. Now, I'm going to tell you why. I believe, I can't prove it to you, but I'll tell you why I believe these levels work really well. Institutional traders use levels called VWAPs, anchored VWAPs. VWAPs, and I've explained what VWAPs are. VWAPs are levels where price and volume inter-exchange. In other words, if you want to know where the most volume traded at whatever price, that's what the VWAP will tell you. It doesn't just tell you the average of price. It takes the average of price and inputs volume into the equation. So, for example, and folks, I really hope you're listening to what I'm saying right now, because this is really important, okay? Think about this for a second. Just think about this for a second. The light bulb is about to come on, okay? Watch this. Look. Let's say that over the next 10 days, $5 million comes into this price, $673.94. $5 million, okay, into this price. $5 million total. But this price right here, $675.92, let's say that $5 trillion came into this price, okay? 5 million, 5 trillion. 671.86 versus 673.87. What price do you think will be more valuable, more important? 671.71 or 673.67? 5 trillion came in here, and 5 million came in here. Obviously, the price right here. When you're using tools that are just simply based on price, that differentiator will never be known. They will a moving average will treat this price equally to this price. Okay? And you're probably thinking to yourself, well, that's not really fair. Obviously, somebody who bought 5 million versus 5 trillion, the person who there's a lot more weight in the 5 trillion price than the 5 million price. And you're right. But if you're using a volume based, a price based tool, you would never know that because all they do is look at price. What you need to do is start using volume based tools, like anchored VWAP. Anchored VWAP tells us where volume is moving into. This tells me where volume is in right now. Okay, now I'm not going to get into this tool right now because it would be a lesson in itself. But the reason I believe these levels work so well is because I believe institutions put VWAPs, these anchored VWAPs, at the 1 week low and at the 2 week low. And I think they buy every time it comes down to this level. Now, I can't prove that to you. I can't prove it. Now, how well do I know this? Well, I've been seeing it for 25 years, every single day. But no one, but I don't have an institution swearing to God in court telling me that. Okay, that they're using the 5-day low and the 2 week, the 5-day low and the 2 week low, the 1 week low and the 2 week low. I can't prove it, but I'm explaining to you why it's so important to understand this. Okay, so my point is these tools work really well because I believe institutions are using these tools extremely effectively over time. Okay, over time. 1 second, I just need to get out of a position that we're in.
Yeah, do what you got to do.
It'll just take a second. I just need to close.
No, I mean it's really cool, to think about something where you've got essentially when people put money on something, right? They're voting on that thing, and to count one vote the same as you count 1,000 votes would make no sense in a voting system. So you got to look at the volume to know how much you should weigh or care about a particular transaction, right? So a trillion's going to be a heck of a lot more important than a million, and a million's going to be a heck of a lot more than anything we're ever going to do. So it's all got to take that weight into consideration for sure. While
Sorry
you're doing
about
that, for those that are asking about targets on the trade that Graham gave out at the beginning of the session, on these monthlies, he's not really setting targets this early. We'll definitely be taking a look at it in a couple of weeks. But if you really want to set a target right from the get-go, you would set 90% of the width of the spread. So since it was a $5 spread, you would set it for a $4.50 profit target. But he would generally say he would wait.
Yeah, and by the way, let's say you're using Oracle. This is a good question, right? Let's say you're using Oracle with these bands. Well, you're nowhere near there. That band, to be above this band, we'd have to be somewhere around 310, 311. We're nowhere near there. Got plenty of meat on the bone.
Mm-hmm.
Like right now, for example, I just took profit on this trade right here, AbbVie, because we've been in it for 2 days, and I just wanted to get out and give people a quick win, and we're up $2. But you've got staying power here. This trade has some staying power. I may want to get back into this trade later, as I mentioned right here. There's some staying power on this trade. This thing's got till 240 to go. Okay, I always give folks trades. Notice where I'm giving a trade near this level. Near this level, we took the trade somewhere. I think somewhere like right here. But anyway, just wanted you guys to see exactly how I operate. There's plenty of upside here. There's plenty of upside. Okay. All right. And I'll take questions on this in a bit. Let me just continue going through this. So let me give you another piece of the puzzle that'll make it easier for you. So now let's say you got your focus on the 8-day EMA and the 15-day EMA. David, correct me if I'm wrong, but you should be seeing my screen.
Yep. We're
okay,
good.
Cool. Okay, cool. So, and I'm going to show you this tool using bar chart, because bar chart, you can mimic me. We can look at it together right now if we wanted to. I mean, we could do this exercise together right now, okay? So you can just go to bar chart. I'm telling you, I'm teaching you, I'm going to give you a couple of things. I said to myself, I'm going to be here for about 45 minutes. What can I teach these folks that they could really take away and that could really change their trajectory in trading, okay?
That's awesome.
All right, so let's all right, so let's go back to the SPY that we were looking at, okay? So you got the whole thing being above the 8-day EMA, not being below the 15-day EMA. And I'm pretty sure David can confirm, but I'm pretty sure this is being recorded and folks will be able to see. Okay, cool.
100%.
Yeah, so you'll be able to see this later. And I have an email address that you guys can use and so forth and so forth. So see this, see how we're sloping right here? So one thing I want to add to my, so this is the 8-day and that's the 15-day, just so you know. Okay. That's the 8-day and that's the 15-day right here, right here. This and this is the 8-day and that's this is the same thing we're looking at right now on the TC2000 chart. This right here. See the yellow and blue? We're just now looking at it right here. And you know what? I'll just even put the same stock in here, okay? Just to make it easy for you all. You could do this on Schwab. You could do this on everything, okay? So this is important. So listen and listen good. Because I don't want you taking any stock. I don't want you to take any stock that's trading above the 8-day and think it's a good stock. It's not. Something else has to be here. You need to have a slope, okay? You got to have a slope. If anybody here who's an architect or you know how you have to have a certain slope, 20-degree slope, driveways, you can't go beyond. It's the same thing with these stocks. You want a slope. So this is even right here. You want a slope. How do you find the slope? Let me show you how to find the slope. And I'm not expecting you to do this with your eyes. I'm expecting you to do this with a technical tool. You will learn how to do it with your eyes, but you're not there yet. Some of you are not there yet. It takes a long time to get good with the eyes, but not with these indicators. You see right here, and I'm using, this is a free tool. Anybody can go to barchart.com and mimic this with me if you want to. You can go to ADX right here, okay? Keltner channel is not the same thing, Tim. Not the same thing. Doesn't use an exponential EMA. Set your ADX 10 days. 10. The standard setting that you will get is 14. If you use 14, that's fine too. It's not going to kill you, but I prefer 10, okay? So let's just delete volume here. Okay. If ADX, write this down. If ADX is between 20 and 50, you have a trend. You want 20. This is 20. This is the slope of 20. This is 30. This is 40. This is 50. Once it gets beyond 50, it's parabolic and no soup there, and it'll just come right back down. So see, so let me show you. You see how every time it gets to 50, it tends to cool off? 50, 40, 44, it cools off. You want it now. Does it matter if it's going up or down? Not really. As long as it's above 20 and as long as it's below 50, you have a trend. You have this on Thinkorswim too. It's called the ADX. It's been on Thinkorswim for about 30 years now. Okay, this indicator's been around since the 70s. Okay, every platform has it. You don't have to pay a penny for it. There's no charge here. Okay, there's no payment. So let me show you. Right here. Look at this slope. See the slope? It's got a nice slope. ADX is usually above 20. But look right here. See how we're chop? We're not doing anything? Look at ADX. 17, 20. Look what happens when the stock is below 20. Okay? Look when it's below 20. Look at that. Some people here actually have my formulas. My goodness. We got some... how many people we got here, Dave?
621.
Oh, beautiful. So you could see right here. See how we're not doing anything? You don't want to be ever in stocks that are flatlining. You want to be in stocks that are moving. You're welcome, Mark. You want to be in stocks that are moving. This is not movement. So anytime you see ADX coming down like this and going below 20, see how I have my threshold here, 20? I have a little dot here at 20. Anytime it's below 20, I don't look at the stock. It's so important that I added this to my data miner. I added this to all my stock fetcher codes. Obviously, I could see it with my eye. I don't need it, but you guys do. So anytime, you know how you're always asking, well, how do I know if a stock is trending? How do I know if a stock is trending? Look at ADX. Forget this. Just look at ADX. Beautiful. Anytime we're above here, we're now trending. Even if we take a little pause and come down a little bit, as long as you're still above 30, above 20, you're trending. Now, the ADX is direction blind. What does that mean? Let me show you. See how the stock is going down? See how the ADX is increasing? It doesn't know if the stock is going up or down, and it doesn't care. It just looks for direction. It's just looking for a slope. So if you're looking for a short stock, you want to see exactly the same thing. No difference. You want ADX to be above 20. ADX is above 20. See, look right here, 1920, nothing. Now you're probably thinking, well, Roger, this is fantastic. Why don't I just look for ADX to be at 80 all the time? Because once it gets above 50, it tends to be mean reverting, meaning it just tends to come back down. It's too much momentum, you know, too much too fast.
It's like Goldilocks. You want it to be right in the middle, right?
Right. You want it to be ideally, you want it to be at 20 and rising. Ideally.
Yeah.
But
would it be fair to say the ADX is the strength of the move, but not the direction of it? It could be going up or could be going down, but the ADX kind of indicates the strength of the velocity of it.
That velocity of the move, that's exactly what it is. It's the angle, it's the slope.
Yeah.
It's the slope. And folks, I'm going to tell you right now, that whole thing about the 8-day EMA and the 15-day EMA, it will not work with an ADX below 20. Why? Because you have no directional bias. And for a stock to move, you need to have some directional bias. Now, I'm going to tell you something cool. There was a period, when I was 5 years old and I walked in the snow, but I'm going to tell you something interesting. See this GE stock? Let me just add ADX. I'm going to tell you something right now. Don't tell this to anybody. We'll just keep it a little secret between
opening playbook secret.
Yeah, between 600 of us, we'll just keep this a secret, okay? Okay, so this stock about 2 years ago, like right here, let me find this. I don't know where we are right now, but there was a period right here. There was a period right here, this period right here, where trading this stock using the tools that I just taught you was like walking down the street and picking up money. And I'm not exaggerating. We had like 95% win rate on this thing. All we were doing was waiting for the stock to come back to the 8-day EMA like this, making sure that the ADX was above 20. And every trade we were making, it was in our stealth surge. These were all trades we took. I don't think we had one loser. And this was over a 1.5 year period of time. You find a trend like this, I'm serious. You find a trend like this, you make sure that the ADX is above 20. See here, it's above 20 all the way. See, I don't really care that it's going down. It's still above. See, look, by the way, look at what happened. It went to 69. Oh my God. I think that might be the high, that like 70. That's really strong. That's a very, very strong trend. And then it moves away. But look at how much opportunity you have between 50. I mean, most of the time, I'm telling you right now, most of the time, it won't be at 60, 70. It'll be between 20 and 40. If you have a 20-degree slope, 15, 20, 30-degree slope, it'll be between 20 and 40, and 20 and 50. And that's where you want it to be. That's where you want it to be. Okay? You don't want it. You don't want it to be anywhere. You don't want it to be anywhere else. You want it to be.
What about when you see the ADX going down from 50?
That's okay. That's okay. As long as it's not going down too fast, it's okay. As long as it's still above 20. And I mentioned that, you might have missed it, but I mentioned that earlier. Even if it's going down, as long as it's above 20, it's okay. You have a slope. You will have a slope if it's above 20. You will still have a slope. Don't worry if it's going up or down too much. It's better if it's going up, but it's not that big of a deal. It's normal for it to go down from like 50 back down to 30. That just means it's still, that means the trend is coming down. That means we're coming here, David. This is what it looks like. It just means.
Yeah, sorry if I missed it.
No. It's okay. It's a good question. It just means we're riding these peaks and coming back down. Riding these peaks, coming back down. Notice. I'm going to go through 10 stocks right now, randomly. Notice, folks, what happens. Notice what happens when we get to the top of this channel. We tend to come back right down to the 8 or the 15. Look, come back down. A big one here comes right back down. Let me pick Oracle. Look, any trending stock you will see. Earnings right here. Earnings doesn't count, but look what happened. It came back here. Look what it's reaching for. Guess what's going to happen when it gets right here? It's going to come revert back down. When momentum gets too strong, it backs down. What I'm doing is trying to codify it. Look, let me just kind of back into this. Folks, is this beneficial to you? Is this giving you value, like real value, not like some, look, we go above.
We already had people saying in the chat that it was great before you even asked.
Oh,
so
okay, cool.
I'm going to say yes.
Cool.
Our chat is a little bit delayed from the live feed, so when you ask a question, you just got to give him a few seconds to answer. But
okay, good to know.
Yeah,
I just opened the chat. I didn't have it open. I'm gonna want to start taking some. But you guys see how it goes from here, comes right down to the 8-day, comes right here, comes down to the 8-day. Do you guys look? 1, 2, 3, 4, 5, 6, 7, and sometimes it'll stay there, but notice it doesn't run away with the circus after it goes to this level. That's why I use it so much. Let's take another stock. Let's take Apple. Okay. I'm randomly picking stocks. So right here, Apple. See, you don't want to play this game here because there's no trend. ADX right here is not very strong. Okay. So let's just take a look at Apple on our list. Okay. Let's look at Apple. So all of this stuff is really good if you got to have that trend. So look at, okay, so let me add, I'm going to add it again. I don't have it preset here because I don't use my ADX here. I really don't need it because I could see it with my eyes, but a lot of folks need it, and that's okay. Okay, so see right here, look at this right here. There's a lot less money here to be made than here. You have a lot more opportunity when ADX is doing this. Okay. Now, just because it's coming down, it's okay as long as it doesn't go below 20. That's as long as it doesn't go below 20. Like this. See this? It went to 44. Look at this. Look at the slope. It's like this slope, right? And then it comes back down. And if we look at Apple here, you could see exactly what happened. Look, this is what we were talking about right here. What happened when we went up here? We come right down here. 15 or the 8. And sometimes if it's really overextended, we go to the bottom of the channel. What happened right here? What happened right here? We come right back down. I'm not cherry picking. I'm not trying to cherry pick. If you have a trend, this is the trend right here. You're going to peak out most of the time right here, and come down here. How do you know you have a trend? Using an ADX. Okay, this is all daily. Daily. Now, let me give you a little. Oh, by the way, give me just 1 second.
Yeah.
Okay, sorry about that. I just needed to check something here. All right. So now I'm going to give you the icing on the cake. Okay. Now I'm going to give you the icing on the cake. So I've talked about great place to enter. I've given you a great place to exit, and I've given you a great place to take a profit target. I've given you those 3 things, and I've also shown you and explained to you that none of what I just said will work unless you have a good slope. Got to have that slope. Everything starts out with the slope. The party, it's kind of like trying to have a party at 11 o'clock in the morning. It doesn't work, but then you try to have the same party at 1 o'clock in the morning, and it works beautifully. You know what I'm saying? You got to have the right, you got to have the right mix. You got to have the right.
I remember those days.
We all do. I'm from Los Angeles. I remember those days real well. So you could see like Irene. You wanted to see what Irene the levels were on Irene, but then I want to give you one more. I want to give you one more. I should come here more often. It's fun here. Let's see what it is on Irene.
We would love that.
And nobody invites me.
We know you're a busy guy.
I
It's hard to ask you for time. It's hard. It's easier to ask you for blood than time.
It is. It's true. So Irene has been above 8. It's been trending this entire time. ADX a little too much sometimes, going to 60. Anything above 50, it's getting you're getting a toppy. Like this is getting really toppy, and you could see it right here. You could You could see. Look how far we're overextended above our area here. Bingo. You're completely outside of this area. Do you think this is going to go much higher? Not till it pulls back. Not what happens here. Pulls right back. What happens here? See, I just randomly picked the stock, right? And guess what? What happens when it gets here? Every time we make a high, where are we? Right here. It's not because I'm so smart, and it's not because I found the Holy Grail. I just know the rhythm of the market, and I'm giving it to you for free. Now I'm going to put a cherry on top of all of this, okay, for you. And I'm going to teach you something important, okay? And then we're going to have a class on it. David's going to stream a class on it. So pay attention to what I'm telling you right now. I'm giving you real good meat and potatoes here, okay? All right. So there is a seasonal tailwind to the market. Okay. Now you're going to see some data on it in about 5-10 minutes. David's going to show you. I'm going to show you some hard data. This data goes back 100 years. So you need to combine the 3 things I just told you with this piece of information. First piece, you need the slope. Second piece, you need the averages. Third piece, you need to have these bands so you could see how far away we are, right? You have the rhythm of the market. But now there's one more thing that you need to know. If you do all of these things Friday with the intent of getting out on Monday, you're going to break even over the next 10 years. Why? Because the market has a window, and that window starts Monday night. And it's pretty lively till Friday morning. What am I trying to get at? Friday afternoons and Mondays, the markets are down. Friday afternoons and Mondays during the day, the markets are down. The market starts getting its mojo Monday night. Monday night. So this is how the market looks. And this, see the down move? That down move happens between Friday and Monday during the day. So a good time to enter trades would be Monday at the end of the day or Tuesday morning, and riding those trades till Friday morning and getting out Friday morning or Thursday night. And if you were to look at my trading account day by day, my journal, you would see that Fridays are the worst trades. Now, if you can combine what I've just explained to you, all together, those 4 pieces together, you would have an edge of about 80 to 80. You would have a win rate anywhere from 80 to 85%. So stocks that are over $20 because you need liquidity, ATR over the movement of the stock, at least $1. You want stocks, you want good moving stocks. You don't want to do this with penny stocks. You want stocks that institutions are buying, because this is how institutional rhythm works. You want a stock trading above the 8-day EMA, but barely, just like AbbVie, just like this. See how barely trading off the 8-day, but at the same time, we're above all of these levels. We're breaking out of compression right here. See the compression right here? See how we're breaking out of the compression? If we fall down here. We don't fall from here to here. We fall from here to here. Now, the only other magic sauce is we engage with the trade from Monday night to Thursday. If you want to short stocks, Thursday night, Friday morning, and get out of that short by Monday afternoon. That's the short window. If you want to go long, the long window is from Monday afternoon to Thursday night, Friday morning. Any Friday after Monday afternoon at 3:00, we're looking to place trades. Now, everything I just explained to you, do you guys want to see hard data with like actual numbers behind it? David is going to show that. First, let me answer some questions. How about that, David?
Sure. And while you're looking at the questions, I'm going to post a few things here. Numerous people are asking to watch this again. I'm going to post a link for the replay. I'm posting a link to Roger's 8 a.m. pre-market must-watch session and a link to his 12 p.m. VIP trade room. Those things. Now, Roger, is like the code and the instructions for putting this on their platform, is that in the VIP trade room in the members area? Do you know?
I believe it is. If not, for Thinkorswim, I believe the back office has it for Thinkorswim, and the back office has it for StockFetcher. If you want it for TC2000, you're going to have to send me an email.
Okay. Well, I just posted, if you're not a member of anything, if you're brand new here and you're not a member of any program, the easiest, cheapest way to get into our members area is with our opening playbook membership. It's just $1. And I posted a link for that too. So if you want to be able to get Roger's stuff that's in the members area, the best way to do that is to just join our opening playbook for $1. And you'll also get Roger's VIP trade room content as well. So I just posted that. I'm going to post it down in the announcements too, so people can get it while stuff's scrolling by. But go ahead, do your thing, Roger.
No problem, no problem. And again, I really enjoy being here, and it's nice to meet new people that I haven't met yet. Although we do have a lot of people here from our regular shows, and I appreciate all the kind words. I'm just opening up the chat for the first time, so let me just kind of scroll through it.
Yep.
Anything, Bob? Yeah, let me just see if anything else. I don't like no. If Oracle Wingman, I never average down. Losers average losers. Look up Paul Tudor Jones, losers average losers, and you'll see what I'm talking about. Yes, thank you.
Bad trade doesn't make another bad trade a good trade.
Yeah, don't do that. If it was so good, then I would wait to get into that level.
Yeah.
Let's see. I'm just trying to see if there's any questions while I. Roger, you need to come more often. Yeah, I do need to come more often. Oh, FTC. That was years ago. Yeah, FTC goes after. I mean, they just went after Amazon. Like, you know what? Okay, do you guys want to tell it? You want me to tell you what they went for us for auto renewals? We were auto renewing, and we don't do that anymore. And that's that. Okay, that was the big thing we were doing. We didn't even know it wasn't a big thing. Big. Anyways, yeah, FTC, please. Our president. They went after President Trump. They went after Jeff Bezos. They can go after me too. All right, let's. Sorry, I'm just catching up right now.
Yeah, go ahead. Go ahead.
Instructions on how to add indicators. If you go to Customer Service Live, they'll tell you how to do that. Visual backtest GE looks typical. Yeah, it looks really great. You say don't till we get above the 8-day EMA. The AbbVie, look at AbbVie. This is about as perfect of an example as you could see right now. ATR, I use the 10-day ATR and I use the 10-day ADX. All those are Wells Wilder's. That's the guy who invented them. He invented them in the early 70s. He used 14-day. It's a little too much. I like to use the 10-day. Now, if you like to use 14-day, you'll be off of my numbers by about 3%. It's not going to be a big deal. I have several folks who use the 14-day. Don't get into these minute details, but I like to use 10-day ATR and 10-day ADX. Oracle target, yeah, let me give you a target on Oracle. Long-term target is right here. Long-term target is 310. Long-term.
Well, I think they were asking about the spread trade that Graham gave them earlier, so I already answered them. So on that, because it wouldn't be the stock value they were looking for, it would be what to sell the spread for.
Understood.
So,
Understood.
Yeah, so that would be, if you want to set a target on that, it would be $4.50. But Graham would say to wait a little while because it's a 5 weeks out. He would wait before setting a target. But if you really want to have one on the books, $4.50.
There you go. Sorry, I didn't know we were talking about.
It's okay.
Yeah, it's not okay. It's not the bands that I showed you. It is not the Keltner channel. Matt and I tried using the Keltner channel. And it did not give us the same equation. It would have been just so much easier for me to use the Keltner channel because it's available everywhere. I don't know why the Keltner channel is different, but our calculation is different than the Keltner channel. And it's right here. It takes the 10-day ATR, multiplies it by 150, and then adds it to the 8-day EMA, and then subtracts it from the 8-day EMA. It's right here. Here's the formula. Okay, just FYI. And
Yeah,
you could do all this.
The SPY just took a dive.
Oh, okay. Okay. Yeah, that's why. Ooh, it did. And so did Vold. Yeah, market internals are. Matt, is there some news coming out or something? Trump is threatening mass tariff increases on Chinese imports. Folks, don't get me started. Don't get me started. Yeah. So, and somebody actually posted the Trading View formula right here, in here for you. Okay. So people are actually answering my questions. Great, great. We do have a lot of people here who are in my program. This is daily. Everything I showed you today is daily time frame. Till you learn to be an expert on daily time frame, don't go on intraday time frame. Don't do it. All right, let's see more questions. I'm just going through here. Yeah, I go live 8 a.m. and 12. I'm going to go live in about an hour again.
Yep.
I don't usually do 3 a day, but today is different and it's Friday, so it is what it is. All right, I don't really see any. I don't see any questions that haven't been answered yet. And if there's folks, if there's a question that I missed, Roger@rogerscott.com. I will bend over backwards to help you become a better trader. I will. I literally will bend over backwards to help you become a better trader. I respond on Sundays. Please feel free to email me. Now, Dave is about to show you some cool stuff. This class is going to completely show you the numbers behind this Monday through Friday turnaround. It's been around for about 100 years now. This seasonal formula, and this goes in. This will reinforce everything that you and I have been talking about for the last hour. Okay. Dave, thank you for allowing me to be here. Graham,
thank you for coming. We appreciate you.
Yeah, my pleasure. I love being here, and I'll see you guys later. I'll see you in about an hour in my VIP room. And if you want to email me, roger@rogerscott.com. David, if you don't mind, would you mind posting my free Telegram sign up into here so folks can have it if they want to?
Yeah, we'll do. I'll grab it while we're playing the
All right. I'll see you guys in an hour, and we'll talk about all new stuff. Bye, everybody.
Thanks, Roger.
Yep. I'm going to do something really cool for you. You guys are going to be very happy. I don't do this very often, but today is going to be your day. This is my way of giving back to you. And I'm going to give you some amazing information. This does have to do with seasonality, but this has nothing to do with data miner. You guys are going to love this. All right. Every time I do this, people thank me. So I'm going to do it again. There will be losers. There's no black box miracle system that prints out winning trades automatically. The whole purpose of this is to help you become a better trader and give you an edge. Now, back in 2022, the lovely Celeste Lindman and I went public to a small group of traders, showing them a new strategy based on anomaly in the stock market going back to 1927. 1927, okay? And our results so far, 127 issued trades, 80% success rate. How did it start? 5 years ago, an unusual pattern jumped out at me, and I'm going to give you this pattern for free right now. You're not going to have to pay a penny for it, okay? I'm going to literally give it to you, okay? An unusual pattern jumped out at me from this list. Hidden in what seems to be a random lines of numbers existed one of the most powerful market forces ever discovered. And Matt, make sure you tell folks on YouTube to come in here, okay? Unlocking what we call weekly turnarounds, all by placing a